So here we go. This is August 5th. We're going to go over the scenario today. So I'm going to do a quick zoom in here. So what happened originally here was at 6:30. I noticed here that during the London session there were two 15-minute trendline breaks, right? So what I want to do in this scenario is whenever you have these trendline breaks, eventually the market, in this case these are sell-side trend lines, the market is broken down twice. It is showing that it is ready to sell and to go down, and typically it goes down to a major, looks like 4-hour zone. This is a 1 hour. Yeah, it looks like it breaks down to a 4-hour zone. This is a 4-hour or fair value gap. Let's look at the daily. Okay, nothing really on a daily, but definitely a 4-hour. So whenever you have a 15-minute trendline break and it breaks, look for price to not only, in this case, sell side trend line is gonna look for the price to crash, not crash, but to continue lower until it hits some kind of 4-hour liquidity. This is in this case the midpoint of a 4-hour fair value gap, and of course met with 1 hour sell side liquidity here. But what it's going to do before that is manipulate. So in this case, this is what happened to me today, but our risk management was on point and we ended up breaking even. Okay, so as you can see here was the, let's say 6:30, the 15-minute. Okay, cool. So price, when I came onto the charts, price was here. So I marked sell side liquidity here, buy side liquidity here. Another thing I noticed is that during London session, price came up and formed a new high of day and then broke down lower. So initially I marked this as buy side liquidity, but this is also a London high here. So what's funny is price ended up tapping into the London high, not reaching all the way up here. Because I've heard in another video that when a manipulation occurs at a high here to break lower, that's not a true high. That first high that's manipulated is still the true high. So that's good to know for the future. So we came down here, and initially what I was thinking was, okay, I'm going to wait for the market to hit one of these levels before coming up and tagging one of these levels, which in this case, wait for market to hit sell side liquidity before it comes back up and targets buy side liquidity. What I should have done is, knowing that eventually it's going to come down, most likely it may touch sell side liquidity and come up to manipulate, which means come up to the very last 15 minute OB of the manipulation move that happened in the morning. All right, so here. So let's now go down just to the perhaps to the 1 minute. So now, of course, what we do now is we wait. Market came down quickly. So now at this point, I did think it was going to come lower, but knowing that it's still early, it's just a few minutes into open, we just waited for any kind of signal. So I saw market come up just to come back down, and it formed a 1 minute FVG. So I'm thinking, okay, if it breaks up, I'm going to take it. And that's exactly what happened. I ended up taking the trade here. Of course, we confirmed by 2-minute and 3-minute confirmations. Also here, what we see here is our triple bar setup. Triple bar, triple bar. And so what I originally did was target the high here. And as you can see, the market ended up coming up and then just targeted here, which is that true high before breaking down completely. So now seeing this, what was important to do is from here, this is actually the main move, right? So from here, what I should have done was look for an entry signal to the sell side all the way down to these 4-hour levels. Okay, so I took break even here. Price ended up going down. Is there an entry signal now that we can look for? Perhaps. So for now, not yet. There's a 1-minute FEG here. Let's see here. Let's look at the 2-minute. All right. 2-minute is showing a 2-minute FEG. So what I did was that. I'll go back to the 1-minute. This price came lower. Lower and lower. Now this is a 7 o'clock news. So price came up, down. And so at this point now, I know that it's going down, and it now presents a 5-minute. 5-minute is where I can enter knowing that the big move has happened, the manipulation has occurred to the upside, and now we know it's going down. So what I'm looking for here is another entry signal from this 5-minute, which I couldn't find. So what am I looking for? Either a triple bar here, which did present here to come up. So I could enter here, like so, in the middle area, but remember to cover completely the 5-minute FEG. And then could come all the way down, right? So here is another opportunity to enter here. 1, 2, 3. Could have entered another one here if it tags us in. Target the high. Down. Tagged in. So what we could have done is from up here, knowing that that was the main move, continue. Now a 15-minute presented itself here, and I actually took this trade, seeing that 15-minute presented here, and the 15-minute was closed below here. This sell side liquidity, a 15-minute closed below here, so I knew that the 15-minute flipped bearish. So it was safe, it's completely safe to look for sells. So knowing that happened, I saw another triple bar set up on the 2-minute, and then a PRC, a pullback, rejection of that pullback, and then a close beyond the zone, which is safe to enter. Also safe to scale into. And then we saw another one on the 2-minute. See a triple bar setup or 3+ bar setup. We see a pullback into the zone and a rejection with a close of the zone. And this is why I was able to enter these. I felt good about entering. I entered twice because I saw it happen multiple times on the 1-minute. Here's another one. See, here's another one here. Triple bar or 3+ bar. Come up. Rejection. Pullback. Rejection. And then a close. Which means you can scale in or you can enter. All right. And take profit. So, once again, the big move was that 15-minute move here. So whenever you see that trend line break happen, you make sure that last order block, you watch for price to enter there and give you this entry signal out of it, targeting the next 4-hour major high time frame draw of liquidity. All right, cool.